Hi everyone, welcome to New England Spring Outlook. Just going to give it another minute, not more than that, before I start. Just let people sign in, whoever is late. So we'll be back in a minute. Thank you. Hi everyone, welcome to New England Spring Outlook, our seasonal outlooks at this point. And the theme of this, I guess, is going to be is the gas the new baseload. Just looking at the gas prices past couple of months and actually since last year into the summer and how the spring and winter played out, it looks like those low pricing are here to stay. So what we'll do, I'm just going to introduce myself, Natalia Misterishvili. I'm a regional director for New York, New England. I probably speak to most of you. And with me is Devin Brecker. She's our Met. She joined us at the end of the fall and did most of our winter forecasting for New England, New York. And she's the one who looked at our seasonal outlook, and she'll be with us for the remainder of the year at least. We're also joined by Terry, who's not going to be presenting, but he's a new England, New York analyst. He looked at IMO flows and just flows in general with New York, New England, and neighboring regions. And there are a couple of slides here that are from him. So what we're going to do is that if you have any questions, please type in the box, and we'll address them at the end of the presentation. I'll just get back to you individually, or if you want to just IM or email us, New England ISO, New England, and my email address is going to be provided at the end. All right, so what we're going to do is quickly look back at winter 2015-2016, just look at weather and demand, which Devin is going to cover. Look at gas prices, highs and lows, exactly why we had those low pricing throughout the winter, and then going to expectations for the spring 2016, which again, Devin is going to cover demand and temp analysis, and I'll take over the gen transmission outages, look at the pipeline, NEGT pipeline outages, imports, exports, and then we'll end with a summary. So Devin will take over the recap.
So this winter played out much warmer than normal across the Northeast overall. We started off with very strong warm anomalies, December averaging as the warmest on record in New England. We saw on average a 14-degree temperature anomaly across December. And so that started off the winter with very bearish demand overall. We peaked at about 18 gigawatts for the month of December. Through the rest of the winter, temperatures moderated back towards seasonal norms, but remained warmer than normal, with continued bearish demand through January and February. So the overall winter peak fell in February at 19.6 gigawatts, which was about a gig weaker than the winter peak of last year.
Perfect, thank you. So as you can see, we had pretty mild winter, and hence we had mild pricing. So December, those are just the on-peak averages, excluding weekends, excluding off-peak. What was our average December, January, and February, as well as average clears. As you know, Mass Hub at one point cleared over $60, and that was mainly the oil units setting up the pricing. But that was our max pretty much throughout this winter. The AGT, this is an average for January, December, and February, and our highest, I think, was January for the AGT pricing, $7.92, which is compared for the past 2 months, is the 2 years, it's the lowest AGT clear that we have seen. What we put together is just the year-to-year changes in flows, and you can see we compared January 2015 to January 2016. And one striking difference that we wanted you to look at is that New Brunswick tide flows did increase into New England. Highgate and phase 1 and 2 are always static, but it's either we would contribute that to either wind generation up north or just better conditions and milder winter overall across the northeast regions of U.S. and Canada that we saw higher flows from New Brunswick. From New York and New England, it's historically New York sends into New England, but since we had such low AGT pricing and low clears, it seems like we had a decrease in tide flows from New York. And that's again because in some instances, New York was actually clearing higher than New England. We did a similar comparison Terry did for the February one. And again, you see that New Brunswick, it picked up the flows into New England, and yet we had a drop in the flows from New York, and that's just on drop in the spread between the two regions. Month to month, pretty stable. The only change again is January to February. We saw less imports from New York in February, and that again, if you go back to that slide on LMPs and natural gas pricing, is that January was our highest month, relatively speaking. Hence, we had more tide flows in January versus February. So why overall, just to sum it up, we didn't have the demand that drove that residential demand that we usually see. We didn't have those cold temperatures, prolonged ones that we saw past couple of years. So the power demand for that natural gas was not squeezed out. We didn't have any competition. The other thing to remember, we had very low oil pricing, very low LNG pricing. Low oil pricing resulted in oil units stepping into supply stack when the gas traded closer to $6-7. So you had your Wyman setting the LNPs on the margin, and that's your mid to high 60s as a first big block. And then you had abundance of LNGs in the system as well. And as most of you know, we do monitor LNGs through one of the companies that we acquired a couple of years ago, Commodity Vectors. And just to give you a brief point, since start of October 2015, we've seen up to last week, and the slide we made as of February 25th, we had almost 49 BCF of LNG imports into New England, Boston area, Canaport, and Cove Point. That included GDF Suez and Matthew that was docked last week. We also had floating and regasification storage unit, Ship Express. So just a quick blurb about what we saw this year over here on the left. So we did see 49 BCF of LNGs. It's still lower. It's higher than what we had for winter 2014-2015, which was 44 BCF, but still lower than our historic high 2012-2013 when we got 65 BCF. So those LNGs in the system with oil prices and mild temps pretty much decreased our pricing and kept the cap on those mass hub LMPs. So what we're going to do, we're going to jump into spring 2015 recap, just to show how we compared to last spring, and then Devin is going to give you an outlook for our spring 2016.
So average temperatures for spring 2015 verified mostly in line with seasonal normals, with some weak cool anomalies if you average out the season overall. However, the spring started with some moderate cold anomalies, averaging 5 degrees colder than normal in March. So that drove moderately strong heating load in the month of March last year. However, across the middle of the period, we saw a significant pattern shift, which warmed temperatures to an average of 6 degrees warmer than normal by May. In fact, 2015 was the warmest May on record for Massachusetts, New Hampshire, and Connecticut. So looking forward to spring this year, we expect to see warmer temperatures year over year for spring overall, with weaker demand early in the season in particular.
Oh, sorry, it jumps over.
Like it just mixed up.
Okay. There we go. Sorry about that.
Okay. So the main climate driver for our spring 2016 forecast is the continuation of the strong El Nino pattern. We do expect El Nino to weaken throughout the season of spring, but it will remain in the strong classification through May. So this pattern generally indicates that we can expect warm and dry anomalies across the northern tier of the United States, with cool and wet anomalies mostly confined to the south. For New England, that would suggest a general warm pattern with strong warm anomalies in northern New England early season especially.
So we have a bit of a reshuffle in our past slides, but bear with us.
So we'll just take a look at the monthly breakdown for spring. We expect a strong north to south gradient early in the season with much above normal temperatures to the north and bearish demand overall, starting us off in March. Just a note, temperatures 2 to 3 degrees warmer than normal is sufficient to tilt the daily mean temp above freezing. So that could suggest that opportunities for March snowfall will be limited to the very far north this spring. And then moving toward April and May, we expect slightly weaker anomalies, but more widespread, extending further to the south. So that would suggest that we may see potential for some bullish cooling load to develop in May. And in terms of precipitation this spring, we expect drier than normal conditions to offer a pretty mild start for the season. So this could drive some bearish lighting load this month if we have drier conditions, then we expect less cloud cover in general. But precipitation will trend towards normal mid-season and then tilting just over to the above normal side moving into May. And so above normal precipitation in May could drive a bit of bullish lighting load end of the season.
Thanks, Devin. Just going through, just to summarize, what we're looking at is that we're looking at pre-warm, above normal spring, with most of some upside towards the end of the month, end of the season, I mean, May, where you're going to see possible precipitation and then upside on lighting load, and that's possibly going to translate into upside in real time on lighting load and some bullish LMPs. So here what we did, we just pulled historical spring look back as to what we cleared DEM price-wise, what we cleared demand-wise, and as Devin pointed out, most of our Marches were coming off from very cold winter. So you had that still feel of winter in March, hence you had past 2 years demand over 15 gigs. So earlier we were talking and we're looking more closer to what we would see like 2012, like a 13.9 to 14 gig loads coming into March, and then decreasing April and slightly up in May. Just a bit of heads up, we look so far preliminary outlook is slightly hot summer and mainly in the beginning of the summer. So May and June season is something to look for if we're looking for volatility. So just looking at the prices, 2012, we had sub 30 pricing overall, and that I think is pretty much fair to say right now for 2012. So same thing, we looked, same historical look back at the AGTs, and we're probably going to see AGTs sub 5, sub 4, very close to 2012, if not lower. If past last week is any indication of how low we can get, we're probably going to see sub 3 and $2 AGT pricing, unless we're going to have some transmission on the pipelines, which we'll touch upon at the end of this presentation. So just generation, what we're seeing, the public websites, the road tech, what we have is the Millstone outage, and that's in April 10th, I'm sorry, and that's for 30 days. That's pretty much coincides with the highest planned outages according to New England NEISO, and that's mainly April starting 5.3 to 5.8 gigs. So from generation perspective, your highest peak of outages is going to be April. Also note today was a Seabrook trip. I didn't put that in the slides, but I'm anticipating that to come back probably by the end of this week, if not earlier, since I don't think that was a planned trip. Transmission-wise, a big one to look out for, and there are tons of small transmission outages in New England, is phase 1 and 2. So we have 2 lines that's scheduled to go out, and that's again, we're looking at April 1st through May, and that will decrease the type loads from phase 1 and 2 down to 1,000 megawatts, so drop of 400 megs. So additional to those generation outages that we're looking in April, we're going to have a derate with phase 1 and 2. So the big one, however, is going to come in May 16th for a week at the end of May, and that's a decreased drop of phase 1 to 2 down by 1,400 megawatts, and that's historically what that line caused last year as well. So we're assuming it's a decrease of 1,400. So end of May, mid-May, something also possibly will play out bullish, especially if we have precipitation and lighting load risk in real time. We have a bunch of SCOBY transmission that usually keeps the downside to Maine. But again, if we have pretty low demand, I don't see that to have much of an impact, maybe closer again towards April and May. This is just the type flows that we have historically, what we've been seeing March, April through May. Most fluctuations, again, are with New York, and it depends how they're going to play out this, what outages they have on their side, and they'll be presenting right after us, I think at 2 o'clock, so it will be great for you to stay on and listen to what they have to say on their side outages, as well as how the Zone A will play out with the Huntley unit outage as well. We're probably anticipating as well at this point from New Brunswick more through the spring, so we'll see an upside in the tide flows from that. Now the main one, and natural gas maintenance, the AGT pipeline maintenance that we anticipate. And the main one we have is that the Stony Point to southeast is going to go out, and that's a pretty long outage. So we're looking from April 13th to August 1st. We historically never had such a related event with such a prolonged and drastic restrictions. Usually, as you know, those restrictions are do not last for more than a couple of weeks. Here we're seeing through most of the summer. And that's going to decrease the flows, curved flows around Stony Point by 300 mmCF per day. So that's going to have an upwards pressure on AGT, and that's going to start again in April. So it looks like our April into May may have some bullishness for the spring. Another one, we have a work on Cromwell and Berryville, and we also have restrictions at Oxford CS, also at Stony Point. But normally the flows are low; they're below the limit by 200 to 400 mmCF a day, anyway. So that work we don't think is going to have much of an impact on the AGT basis. This is just maintenance, the snapshot of maintenance that we have for you to go through into more detail afterwards. We will send out the slides and the presentation itself with the recording. But again, the one to look out for is Stony Point to southeast, and that's going to start again in April, and it's going to last through August. Right. So the southeast, just to give you the flows over here, since we don't have historically such a long outage. Just to give you the flows on southeast, what is the capacity scheduled, what's our limits, and what's the AGT base price to any of those D rates. Most of the volatility is definitely in your winter months. The rest of the volatility is not that distinct through the spring, summer, or fall seasons, but that's something that still shows how close the flows comes to the limits. So the works that were listed earlier will have an impact on AGT pricing. How much of an impact? I think it's going to be limited by the fact that we're going to have a mild spring, but definitely in April, when we have those AGT, we have the most generation outages as well as the Millstone outage. I think this impact is going to have more of an upside on the AGT pricing. And then Burrillville flows, we just don't think that work is going to have much of an impact on AGT just because the flows don't come to the limits, and we don't think we're going to have that much of an impact from the work. The main one to look out for is Stony Point to southeast. So just to summarize, demand-wise, we're bearish. Generation-wise is mixed. The main one is just April to look out for. Transmission is bullish with phase 1 and 2 D rate, and then a complete outage at the end of May. And natural gas is mixed just because we have the works closer to the mid to end of the spring season. So I'm just going to put us on hold, just look through the questions if there's any, and if something I'll answer later. On the last note, we have actually Genscape Energy Forum, and so discount for clients starts April 21st to 22nd in Chicago. I think some of the analysts are going to be attending as well, so if anybody would like to look into this. So it doesn't look like we have that many questions, but not surprising considering there's not much going on right now. But the slides will be sent over at the end of this presentation, probably closer to the end of this day, with the live recording. Please don't hesitate to contact me or Devin if you have any specific questions regarding the outlook and the demand. And again, just thanks for attending and have a great day.